Boom! What's going on, guys? 360 Digital Closing Bell Daily Energy Market Summary, episode number 143 here on this gorgeous Thursday, October 22nd, 2020. As always, I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, the director and publisher of the world's greatest website, oilandgas360.com, international man of mystery, Stuart Turley. How you doing today?
It's a beautiful day in the neighborhood here in my Dallas office.
Yeah, we've got you with no green screen now, so we've got a little, as we call it, the rough around the edges look. But we have a great show for you guys lined up. Yeah, crazy stuff going on in the news. I mean, we've got 8 stories we got to cover, from natural gas stocks all the way to stuff going on in the Black Sea. We'll cover all and everything in between. We'll also cover everything that happened on the equities markets. We've got some stimulus talks continuing to roll out. But first, guys, just subscribe. 360 Digital Closing Bell. You're back on iTunes, back on Spotify. You can also subscribe to this YouTube channel to stay updated on all of these shows. Do whatever makes the algorithms go nuts. If that means you have to sit there all night, subscribe, unsubscribe, resubscribe, just seriously do it. It's a great way to honestly spend a Thursday night. What else better thing? There's no World Series game on tonight. Celebrate the Rays beating the Dodgers last night, and just all night subscribe, resubscribe, unsubscribe, do whatever makes those algorithms go nuts. When we move over into the equity markets, I mean, again, I sound like beating a dead horse here with all of this stimulus news talk, but I mean, that's really what's going on right now. Nancy Pelosi met with Steve Mnuchin, who's the U.S. Treasury Secretary, and after those talks came out today, the quote was, "We are just about there." So that basically turned indices north. SPY was only about a half a percentage point up. Tech stocks were only about a quarter of a percentage point up off the back of some interesting earnings. Tesla earnings out today. They were okay. Looks like they're going to deliver more cars than expected. But the interesting part about that, Stu, is Tesla's making all of their money off selling their carbon credits to European European emitters, which is hilarious. Now, they're thinking it's only about a 1 to 2 year run, but it was like over 20% of Tesla's revenue came from selling their carbon credits. Unbelievable to think about. So, I mean, that's where some of those mixed signals are coming on from Tesla. Dow Jones was only up about 0.6 of a percentage point, or about 170. So we saw weakness earlier in the market. These statements from Nancy Pelosi coming out saying, quote, "We're just about there," turned conversations up. Jobless claims actually fell this week as well on the data side, 787,000. First week since March, we were below 800,000. I mean, it's kind of funny when that's a news topic, Stu. We're below 800,000 and jobless claims. Markets go crazy. That was below estimates that economists had at 875. When we move over into the crude oil markets, 40.65 for that index for the front month crude oil contract. It was up about 1.6 percentage points, really taking into account those bullish job numbers. Yesterday, we had a little bit of a bearish release with in terms of the DOE inventory numbers. Today, with these jobless numbers, and we can at least get people driving a little more to their jobs, might as well turn. And that's really what the market saw today. We also saw some long-term supply issues. We heard some stuff come out on Russia and OPEC plus. I'm sure Stu will talk about that. That moved back into the curve about 1.6 percentage points. I mean, we're still 42.60 on that back end of the curve, though. Not good. Natural gas side flirting with $3. We were above $3. We were below $3. Currently trading about $3 even in about a quarter of a penny. Down about 0.75 of a percentage point from the overnight highs. Back into the curve was actually down a little more, about 0.9 percentage points. 307. XOP contract was up 5 percentage points. 44.70. Talk about a leader on the day. XOP. OIH has a good day. 2.5 percentage points. 101.46. On the downside, though, I mean, yes, good numbers on the upside. Still some companies on the downside, though. Barnwell Industries down 4.5 percentage points. Falcon Minerals was down 5 percentage points. Peabody Energy was down 6 percentage points. On the upside, though, good numbers. Natural gas players up big. Southwestern Energy, $3.12. They're up 8 percentage points. Goodrich Petroleum up 9.6 percentage points. They're having some drinks tonight. Talos Energy, they just spudded a new offshore well, obviously going well, up 10 percentage points. CNX Resources up 10 percentage points. Gulfport Energy, don't invest in them. They're up 11 percentage points. Contango Oil and Gas, it doesn't get much more gas than that. Ticker symbol MCF, they're up 15 percentage points. Markets obviously liking these long-term gas numbers. High Point Resources was the biggest mover on the day, 21.9 percentage points. They're up to 15%, 15 cents though. Interesting things going on there. Stu, we might as well start on the news desk, the international side, because it's a wildly busy day for us. I'm going to buckle up. You've got us going around the laps quick.
Yesterday, we went around from Argentina to the North Slope and everywhere else in between. Today,
Is today's flight free? I think I've got enough frequent flyer miles built up. Is today's flight on the house?
It's going to be not as bad. We're going to start in India, and we're going to buckle up real quick, and then we're going to go to Iran. So if you're sitting down in India, here we go. It's kind of like Indiana Jones as they go across that,
yeah, the little map bouncer, yeah.
We're going to have our graphics department work on that. India got thrown out of the giant gas field in Iran, even though India discovered this field. This field is so, they discovered it, but they got tossed. So the giant field is about 21.7 trillion cubic feet of gas reserve, 1.28 trillion cubic feet of natural gas, and 212 million of gas condensates. That is crazy big amount of gas. Now, they were not getting the service they needed out of those three Indian companies. I'm not sure that the replacement companies or the country of Iran has the technical skills to be able to come in and backfill this. So this is almost good news for trying to figure out and not come back online.
I want to harp on something you said there, Stu, because you really mentioned that you don't think this is going to come back online. Why don't you think this field's going to come back online?
It's because the expertise in there is not there. They're having to use other countries in order to support their support in countries. So India had the three teams there, and they evidently the Fazad B gas field. I'm not seeing any of the companies that are in Iran have the technical capability of picking up where these three countries.
It's completely fair. Hopefully, this lends itself to our international oil field service people. Maybe they get a couple contracts out of this. But no, makes sense. Let's move on. What's your next story?
Okay, next story. Do you remember yesterday when we've had Turkey just going flat bonkers over the last 6 months? And I've been doing a little nosing around, and the reason is because they have been flat, busted, broke, and they've been hiding it from the world. What has happened is that they have been trading money back and forth on their own rubles and shekels, and it's not shekels, that's Israel. But when they had been going on, the numbers were just crazy. GDP, top 10 economy with a GDP of $2.6 trillion. They can't keep it up. The problem is they've been borrowing way too much money. They can't pay it back. They're broke. They can't pay their bills. That's why they've been fighting in the Mediterranean for all these new natural gas fields.
Well, they need that long-term income.
They need income. And I thought it was because they wanted to be energy independent. It's because they're broke.
Yeah, so they got a worthless currency.
Absolutely. Their currency is worthless. So when you take a look at the Trillion Energy Company, they just had an announcement that they had very nice discovery out there. The South, boy, this is where my Texacan is going to come in. Aco Sub Basin, or SASB, I can do that one, is one of the Black Sea's first natural gas development project. It is a new find in there that's going to even become bigger. So this is right next to the Tuna One. You and I had laughed on it about 6 or 7 shows earlier about who would name the first well Tuna One. Go figure that out. So anyway,
someone's having sushi, I guess.
Yeah, I'm not sure, but all of that mess is making sense. I thought it was because Turkey wanted to be energy independent. It's because they're flat broke and there's some more problems coming around the corner that I want to get some answers before I get to you.
Yeah, I mean, I think it's, it's really interesting what's going on with everything in as you like to call Club Med of the Mediterranean. When we move over to the U.S. shale side, something that kind of touches both. Exxon Mobil's actually thinking of laying off some workers here. We don't know how many, but in an email sent, Darren Woods, this CEO, basically said, we are making tough decisions, some of which will result in friends and colleagues leading the companies. Oh, dun, dun, dun. As we know, Exxon and Chevron are kind of holding pat as the last two companies of the super majors to really come out and really dive deep into this ESG stuff. So it'll be interesting to see, is this a prelude to maybe a Q3 shift and Q4 shift for Exxon into maybe more of a renewable space? I don't know what happens there. You did put an interesting publisher's note on there. New jobs in renewables markets will not be able to fill all of the oil jobs that are lost, though. So, it's really sad what's going on, and hopefully, pay a good severance over there. A couple other things we see: Samson Energy 2, which is a Tulsa-based Powder River Basin operator. They only saw a 6% reduction in their RBL, $75 million, with a $3.5 million credit line, which is interesting, mostly because Powder River Basin, not something you would expect to be in really prime acreage and be something that they think growth can come from in terms of, just kind of looking around. I've never really been a fan of the Powder River Basin. Obviously, somebody is, though. Only a 6% of reduction shows some strength, at least into what you're able to do if you have some good acreage, specifically that Powder River Basin stuff. Again, not necessarily a fan myself, but hey, operating thing, it's interesting there. Obviously, number 2 means this is the second round of them. I actually know I have a former coach that I played with at Mines with. He was a grad assistant, worked for Samson Energy round 1. I've got some great stories about this. Good people over there. It's interesting to see how this Powder River Basin specificity stays out. Speaking of layoffs, Transocean on the oilfield services and oilfield drilling side, about to lay off about probably 75 to 100 people. They quote about 50 to 70, 100, but it'll probably more in that upper range. Looks like one of their big drill ships didn't get renewal contract, and so just be sitting idle there. Can't have those people, unfortunately, on staff. Looks like they did say in their release to the Texas Railroad Commission, if they can find a contract, they will go ahead and fill those. But until then, they're going to go ahead and pay out a severance. So our heart goes out to those people. Moving markets really on the natural gas side, crude oil or natural gas inventories come out 49 billion cubic feet build, which is unfortunately just 3 billion cubic feet bigger than our build last week. So sort of trending in the opposite direction. Looks like those analysts were expecting it a little lower than that. I was hoping we'd see somewhere between that 20 to 35 range, but 49 billion cubic feet. I mean, there's just, talk about we get a good number in that's bullish. We bring a bearish number in. Bearish numbers come in. Bulls come back in and take over. So, I mean, you want to talk about everything. It's just been wild. I mean, crack spreads, Brent to New York Harbor is only about $5 right now. Probably the weakest that's ever been since September 4th. So just some of the dynamics that are going around in these oil markets and natural gas markets have just been wild, Stu. It's been pretty unbelievable. Something interesting I saw at the end, just to wrap up here, Chevron CFO Pierre Barber went on CNBC this morning, and his quote was, too many companies with 2 weeks of balance sheets, they're going to need to, as our friend Scott Sheffield said, de-lever. Well, you're about 6 months late to the party, dude. I think this is the consensus that's been going on a while. It's just kind of funny. When you hear the super majors come out and put their name on it, you've missed it by about 12 months, because those guys have to operate on a time frame that's what. So, I think the rest of the industry is kind of catching up right now. As we move forward, I think EOG and Cimarex, I'm just going to throw those 2 names out there. I don't know what's going to happen with them, but something's going to move with those 2 companies. I think they're in that sweet spot. If they have enough capital to do something, they have enough attractive assets to do something, they have motivated management teams who want to probably make a deal and agree on a lot of this M&A stuff. So I think, as we move forward, specifically in this quote-unquote crazy M&A market, which I wouldn't even call that, I think those are 2 companies to watch for as we move forward, who have the leverage to either go out and buy companies, merge with companies. Obviously, I think the dark horses are in there, or if Exxon and Chevron decide to do anything. Obviously, Chevron's done something with Noble, so the real question is, what's Exxon going to do? Is it going to go out and buy some of these smaller ones? We've teased, Stu, the Exxon Chevron merger has been teased. We saw that on CNBC a couple weeks ago. Seen that on Twitter. I don't know if I like that as much. I think it's going to take some time before kind of that ever gets to that point, I think we see more consolidation around the small ones. But I don't know if Exxon even makes a move. I mean, even with all the consolidation, they're still the fourth largest operator in the Permian. So it kind of gives you an idea where their acreage is. It's pretty unbelievable. We had a lot of stuff drop on the news desk today, Stu. Anything particular that we missed?
Oh, I don't know. I missed your non-GAAP rant on some of the stuff, but I think we covered everything else.
Yeah, I mean, well, as earnings become to fall out, we're going to be getting into GAAP versus non-GAAP a whole heck of a lot. But I think with that, guys, we're going to get out of here. Let you guys get back to work, finish up your day. Thank you for checking out the 360 Digital Closing Bell here on the world's greatest website, oilandgas360.com. For Stuart Turley, I'm Michael Tan. We'll see you guys tomorrow for the Digital Ticker.